Do you actually know where all your money is invested? Not just one SIP, not just one Demat account. I mean everything. Your mutual funds, stocks, gold, insurance policies, old FDs, EPF, PPF, dormant bank accounts, inherited shares, physical certificates, and forgotten investments. Because today millions of Indians are investing money, but they have absolutely no clarity about where all money is, whether it is growing, whether it's all allocated correctly, or whether inflation is silently destroying returns. And this financial disorder is becoming India's hidden wealth crisis. Let me show you how big this problem actually is. India's nominal GDP today is estimated at nearly 397 lakh crore. Now think about this carefully. Unclaimed shares and dividend alone are estimated close to 1 lakh crore. That means nearly 0.25% of India's entire GDP is sitting idle in forgotten or unclaimed financial assets. Unclaimed bank deposits, unclaimed insurance, forgotten shares, dormant bank account, and old investments. India's total unclaimed financial assets have crossed 1.1 lakh crore. And that is larger than the GDP of several small countries, comparable to annual budgets of major Indian ministries, and similar to the market capitalization of large listed companies. This is not a small money. This is a massive block of frozen capital sitting outside active economic circulation. And the most shocking part, a large portion of this money belongs to ordinary Indian families, somewhere in India right now. Someone's grandfather bought physical shares in the 1990s, a forgotten insurance policy is lying inactive, old dividends are accumulating unclaimed, dormant bank accounts still holding money, and families don't even know this investment exists. Many people are alive but financially disconnected from their wealth. And you may relate to this if your parents invested through paper share certificates. Your family changed addresses multiple times. Old KYC was never updated. You changed your mobile number. You forgot an old Demat account you invested through an agent year ago. Or your parents never documented investments properly. This is extremely common in Indian household. The real problem is financial clutter. Most Indians don't actually have wealth problem. They have visibility problem. Money is spread across 4 bank accounts, multiple insurance policies, random SIPs, gold jewelry, old FDs, inactive Demat account, EPF account, and inherited assets. This is not organized wealth. This is financial clutter. And because of this, returns become inefficient, portfolio becomes duplicated, inflation quietly destroys value, and families lose financial visibility. Let us understand the biggest investment mistake. Mistake number 1. No asset allocation. Most people buy products without understanding allocation. This is why many portfolios look like too much gold, random mutual funds, multiple insurance plans, and low liquidity. Mistake number 2. Insurance treated as investment. One of the biggest mistakes in India is people confuse protection with investing. Insurance should protect wealth, not become core investment strategy. Mistake number 3. Duplicate mutual funds. Many people own 8 large cap funds, multiple ELSS funds, several SIPs, doing almost the same thing. More products do not mean more diversification. Mistake number 4. No family visibility. If something happens to you today, will your family know where your investments are, which account exists, who the nominees are, and how to access documents? This is why thousands of crores remain unclaimed. Let's focus on government initiatives. Now the government of India is aggressively trying to solve this issue because the amount has become too large to ignore. Your Money, Your Right campaign. The Ministry of Finance launched a nationwide campaign called Your Money, Your Right. SEBI and IEPFA are conducting investor camps across cities to simplify shares recovery, physical to Demat conversion, nominee updates, and pending claims. Now, most importantly, the government does not charge citizens to recover their rightful assets through official channels. The IEPF claim process can be initiated directly through the official portal. The system is also being upgraded with OTP verification, AI-based processing, automated validation, and faster approvals for smaller claims. Now, here is something people don't know. RBI incentives to bank. Banks are now incentivized to actively trace customers with unclaimed deposits, which means institutions are now financially motivated to help reconnect people with forgotten money. Let's understand the wealth organization framework. Before investing more money, First, organize the money you already have. Step number 1. Create full financial visibility. List everything: stocks, mutual fund, gold, insurance, EPF, PPF, FD, real estate, crypto, loans, etc. Because you cannot optimize what you cannot see. Step number 2. Calculate your net worth. That is asset minus liabilities. That's your real financial position. Step number 3. Segregate investments properly. Every investment should have a role. For example, 6 to 12 months expenses, create emergency fund. Long-term wealth creation, go for equity. Stability and liquidity, that is a good option. Gold for protection hedge, not core wealth creator, absolutely. Insurance for protection only. And retirement bucket, go for long-term compounding. The biggest financial problem today is not lack of investing, it's lack of organization. Millions of Indians are already have wealth, but because the money is scattered, undocumented, poorly allocated, or forgotten, it never compounds properly. Real wealth is not owning many investments. Real wealth is visibility, structure, allocation, documentation, and compounding. Because money that is forgotten is money that stops working for you. India does not have a shortage of wealth. India has a shortage of organized wealth. So let me ask you honestly, could you calculate your exact net worth within 10 minutes? Comment yes or no. Please share and subscribe if you like this video. Have a good day. Thank you.